And you know what that sound is? That means we are live here on YouTube. Tackle Trading's halftime report. Coach Tim, Coach Matt, Coach Cody here. And Matt, the market's starting to show me some strength here. Breaking out in tech, lots going on. Let's break it right down. First off, how you doing today, brother?
Tim, doing really good. A little better than the 8-second halftime report that we had 6 thumbs up on. I like that.
Well, was there any interesting thing that happened in those 8 seconds?
I think I said something. I don't know. I was doing a prep for the halftime report, looking at different articles and whatnot, and Cody's like, "Oh man, I just went live." I'm like, "I hope I didn't swear."
Well, I didn't even know it was happening. Obviously, that's how bloopers start, by the way. So, Cody, touche, young man. Let's not make that mistake too often. Moving to market today, the S&P 500 is just testing 2,600, but really the strength is in tech, Matt, and financials. JP Morgan, they had a disappointing earnings, but they are showing me intraday strength and actually ending on a fairly green candle so far. We're still, 3.5 hours till the end of the day, but it's showing me something. Let's start with the S&P, and let's just kind of break down the overall, technical market here at this 2,600 level.
Yeah, I mean, once you get above 2,600, obviously that's bullish, Tim, and you're talking about potential breakouts here. A lot of stocks that are doing the exact same thing. So, it's something that the bulls have been waiting for. We've been waiting for a potential trigger above 2,600. The one thing I want to say here, though, on the S&P 500, 2,600 is the number we give. But remember, resistance and support pivots are zones. They're not a specific number. And if you'll recall, we put that right at that 26, you give it 26.25, I'd say. 26.25 down to about 25.75. So that would be that kind of that zone of resistance. So definitely positive on the price action getting above that level, but just be a little cautious with that level of resistance. I'll tell you where I kind of like what I'm seeing here today from a bullish perspective is not necessarily on the S&P, but on the NASDAQ. I really like this getting above these pivot points, breaking out above that pivot point. You got clear selling up until about 6,800 here, Tim. So I like what I'm seeing on the NASDAQ. I'd like what I'm seeing on the S&P. I just want to put in a little bit of caution that you still have this, pivot point up here about 26.25.
What's interesting about all this, the number one loser on the market is still PCG. I'm wondering when we're going to delist that company. I was looking at the top 5 up and down. Same old storylines, though. PCG down another 7% or 20%, I should say, $1.70 on an $8 stock. Matt, that company is obviously under such duress. They're not going to be on that Standard & Poor's for long, don't you think?
No, they might not be a company for long, bro.
Yeah.
This is absolutely untouchable at this point. They still have bankruptcy. They just filed Chapter 11 bankruptcy. There's going to be lawsuits here. It's just a stay away from me. This company does not exist for me right now.
Yeah, one of the biggest gainers, though, is Netflix. I saw the news coming through, and I know we're going to get to tech here in a minute, but there's so much going on these individual companies. And that's the thing about earnings season, random guidance. You have these news coming out. They're going to increase their basic subscription plan, Matt. Standard plan from $12.99 up from $10, I think. And then they also have their premium plans going up a couple of bucks.
I think they're all going up $1 to $2 a piece. Standard plan $11 to $13. I saw some quick hot takes on this saying, oh, Netflix's catalog doesn't deserve a $1 to $2 raise. And I'll tell you right now, let me ask the halftime crew. I'm sure many of you are Netflix subscribers. So for the Netflix subscribers out there, are you guys going to cancel Netflix because of a $1 to $2 increase?
No, come on.
No, I'm not either. Okay, so for me, if I'm looking at this from a trading perspective, I like the increase here on Netflix. I think it's a really good decision, and I've ripped on Apple's pricing plan before with the iPhone. I think Netflix is still a bargain. I think they're still cheap. I think they could even increase it even more, and they wouldn't lose that many subscriber growth, in my opinion. And Mark asked me a question on the pod yesterday. When's Netflix going to show a profit? I said, and jokingly, I said, I don't know, maybe 10 years from now. I like it. Yeah. I like it.
You know, what's interesting about it, obviously, that's showing strength as a company when they can raise prices in the face of all of this stuff going on in the market. Obviously, Wall Street loves it. Breaking
Well,
out
Tim,
again.
let's say hypothetically we go through a massive recession,
Mm-hmm.
right? People are going to still want entertainment, and there's nobody really cheaper than Netflix. And they have a massive, massive catalog. Massive. You can make fun of whether or not they're putting out, Academy Award winning and quality in that capacity, but they have a massive catalog. People eat it up, and they can absolutely survive a $1 to $2 increase in their sub. I think they should have went even more. But what's interesting is that was leaked out in front of their earnings announcement. And look what Wall Street's doing, Tim. Look at the volume coming into this. Look at the volume over the course of the last, 2 weeks on Netflix. Look, you just got massive movement coming in here. You have buying volume galore,
Sure.
and earnings is coming up here on 2 days from now, and you're up 6.67% today. That's extremely bullish. Now, obviously, Cody said something very, very smart in the pre-production show here today. He's like, yeah, and we're all just kind of watching it because it's so far, it's parabolic at this point, right? You can't really touch it, and you certainly can't touch it from a trading perspective outside of day trading before its earnings report. But I do want to show you something on this sector because Netflix is in the newly minted communication sector. And the communication sector, which includes your Facebooks, your Netflix, your Googles, Twitter, these types of companies, it has been in a tremendous downtrend since it's the last 6 months, even before we started seeing the market go down in October and November, and specifically December of this past year. Communications was going down all the way from June and July. Look what's happening here. You have a very consistent trend line moving down. You had consolidation at that trend line. The market in this recovery for the communication sector has outperformed it percentage-wise against the broader market, and the broader market has done really, really well in the recovery over the last 2.5 weeks to start the January 2019 year. And now you're breaking out of that. That to me is a very, very positive sign for the communication sector. You look at this on a weekly chart, you're starting to see a lot of strength coming into here, Tim. This is strength we have not seen in the communication sector in the last 7 months. So I like what I'm seeing in the communication sector. So even if, with Netflix specifically, which is a big, big, big boy when it comes to that, when it comes to allocation in XLC, even if you can't touch Netflix, you got to start getting your interest a little peaked here on the communication sector as a whole.
Mm-hmm. Yeah, there's no doubt. You've got reversal characteristics going on. Google's looking good here today as well, Matt, up 3% and showing me some strength in that communication sector as well. You're just seeing ever so subtle reversals. Now, they all have earnings in front of us, so there's always going to be this caveat here. Yeah, but let's wait for the earnings. But you've got to respect the action here today. There's no doubt about it.
Mm-hmm. Yeah, it absolutely does have earnings coming at it in front of Facebook, in front of Google, in front of Netflix, and all that. But they're all starting to reverse here, and you can't deny that. And you look at the news today, Tim. Okay, you look at the news today, and we'll go through some of these stocks here in a minute. But you have a major Brexit not election, but a Brexit vote here at about 2 p.m. Eastern Standard Time. That's noon our time. So here in about an hour and 20 minutes, you're going to start seeing that vote come out on Brexit. And it's widely expected to not pass, right? The only question with Brexit is how bad is it defeated? Is it defeated by over 100 votes, less than 100 votes? Is it going to be between 20 and 50 votes? We don't know. But the reason that's important is because of this. If it is destroyed from the vote count, Theresa May's job is in jeopardy in that capacity. And with that said, so is the entire Brexit negotiation, a soft Brexit negotiated with the EU. So if it just gets absolutely blown up, that's going to cause a lot of volatility in my opinion. So that's coming at us. We had the New York Empire Manufacturing Index came out today. That was a miss. We had PPI report come out today. That was a miss. You had negative news come out across the board on earnings. Delta, JP Morgan, Wells Fargo, all had issues regarding slowing growth and forward guidance and misses on earnings per share. JP Morgan missed on earnings per share for the first time in 15 years here.
I read the report too, but here's the thing, Matt. JP Morgan up 1%. Wells Fargo up, no, they're down 1%. United Health had earnings. They're up 3%. Actually, that chart looks amazing, UNH.
Yeah, UNH actually beat on their earnings per share as well. So they were actually coming down intraday, but then they started moving back up as the cash opened. And that's another thing, Tim. Negative news coming overnight, markets come down. What happens at the cash open? We've talked about this recently as well. Look what happens at that cash open. Markets coming down. Here's the cash open. Boom. Right? We've seen this pattern here. So there's a lot of bearish sentiment out there. There's a lot of bearish, information out there. And a lot of this information leads to that biggest concern in the market, slowing growth. That's what it leads to. But here's what you also had happen. You had China come out and say they're going to massively stimulate their economy again. You had Mario Draghi give a speech earlier today where he talked about how the European, economy is slowing down, and they're going to basically do what it takes, right? We're in that mode, do what it takes. We've heard that from central banks in the past, and we know what that means. That means further stimulus. So in the face of that, you still have this massive stimulus mentality coming in from the European Union and China, and that gives it a little bit of boost. But in terms of this breakout, in the face of that negativity, Tim, you can't deny that the market's breaking out of 2,600. You can't deny that the communication sector is breaking out of a tremendous bearish downtrend. You can't deny the fact that the NASDAQ here, in the face of all that negative news, the NASDAQ is breaking out of a tremendous pattern and should rise into the 6,800 number. So my whole point is trade what you see, not what you read, not what you hear. Trade what you see. There's things that we have concerns with, obviously, but until we start to see that market start moving back down, you got to take this back into the neutral territory. So to me, I'm moving back into a neutral territory. I was slightly bearish, but I'm not denying the breakout above above those key levels of resistance.
Got to be respected. There's no doubt. Advanced decline line on some of the internals. The S&P has 370 companies going up, 120 going down here today. Big gainers, things like Insight, Netflix, Citigroup, 3, 4, 5%. You do have some losers, Sherwin-Williams, Goodyear Tire, but it's a stock picker's market in some of that regard.
Sherwin-Williams had slowing growth concerns, missed on forward guidance.
Yeah. Move on to the Dow. Let's look at the blue chips here for a second and talk about big caps. I think that UNH is going to end up on an option report here very, very quickly.
Well, it got talked about in the scanner report meeting last week, but it just had earnings.
Yeah.
We like it above 250.
Yeah, I agree. Dow components, again, strong. Dow's actually up here. What are we looking about? A percent is all quite under, actually a little bit under 1%. United Health is leading the way. Microsoft, Nike, Cisco, and Apple. You've got tech strength, but the Dow's going to be more mixed. 3M, DuPont, Home Depot, Caterpillar, all down.
That's not a breakout yet.
No.
And the S&P isn't a breakout yet either. Let's see what it does throughout the day. Okay. We've seen test. Let's not get ahead of ourselves. I think the strength's coming into communication and it's coming into tech.
Mm-hmm. Yeah, I agree. We're seeing certain areas of the market show me strength. Tomorrow's going to be very important. Each day, when you get into earnings season like this, Matt, the fireworks they're going to be hot and heavy, and they're going to continue to go. Tomorrow morning, we have earnings out of some major banks. We've got more going on. This Brexit vote, I know it starts at 2 p.m. Eastern, but when do they actually get clarity on it, by the way?
We'll start getting clarity after that.
Right after that, somewhere in there.
I'm certainly not an expert on parliamentary law and how they procedure and whatnot. But an American vote like that, if you'll compare that to, say, the healthcare vote we had last year, that took about an hour.
Yeah.
The healthcare vote did.
Yeah, it'll be interesting. Maybe I'll stream live the British Parliament on a Tuesday afternoon. I think there could be worse things to do with my time.
Yeah, good luck with that.
Did they not do that? Did they have a closed session or something?
I don't know. No, I was being completely sarcastic. I just said, yeah, have fun.
Have fun with that. Some of the weakness here, Matt, Home Depot, DuPont, 3M. Let's look at a couple of stocks that are actually down here. Not really weak, just down a hair.
Not
DuPont,
it's
DWDP.
I mean, Home Depot's showing reversal characteristics.
Yeah.
A breakout of 180. I think you can't deny that.
Mostly a strong market here, even in large caps. You're seeing it. You got 23 companies up today, 7 companies down today on the Dow Jones. So health there, but I would say the S&P actually looks better, and the NASDAQ probably leading the way in terms of strength. If we're ranking the indexes, and we'll look at the RTY and the NQ as well, but I might put NQ up there top number one, quite frankly. The NQ is breaking that little pivot point, and it's showing leadership in key names.
Yeah, and I'd probably put tech number one too right now. But again, I'm pretty neutral across the board. I'm not going to overreact to this. I was slightly bearish. I'm not going to deny the strength coming into these breakouts. So I am going to switch to more of a neutral stance in the market. But in terms of the overall strength of these indexes, I think you got to say the NASDAQ's, the top here. And it's not really a performance issue. It's just from a technical perspective, Tim, you're getting back above these pivots. You're showing strength getting above this little resistance pivot as well. And you got a little bit more clear selling up until it gets into this, larger downtrend that we've established over the course of the last few months. So it does have a little bit more clear selling to the top side than say something like the S&P 500 does. Sitting here at 2609 in the market right now, you still have that overhead resistance pivot point at about 2625, and you still have a decreasing 50-day moving average right here at 2630 as well. So you have a little bit more resistance levels that are closer to the S&P 500 than you do on the NASDAQ. Looking at the Dow to me hasn't broken out yet. It's still kind of, and it's kind of doing the exact same thing as the S&P 500 is. So you could rank the S&P and the Dow fairly similar at this point, probably the S&P with a slight lead there. And then the Russell 2000, which can always play a little bit of catch up, but I'm not liking this chart on the Russell 2000. So I got to have the Russell 2000 at the very, very, lower of the end on the scale. And I'm still slightly bearish on the Russell 2000. And if we do get some degree of bearish momentum to the downside, I would look to short the Russell more than I would look to short some of the other indexes.
I agree. I'm looking at the overall market, strength in tech. It's a mixed market. You've got weakness in small caps. That's actually old support, new resistance, perfect bear retracement pivot, Matt.
And to answer Adam's questions, yes, you're looking at a snapback rally. You're sitting at resistance, and I get the volatility in the market. I get the random news. I get the uncertainty. But if you can't sell a bear call on the Russell 2000 at this point, you can't sell a bear call at the Russell 2000 at any point.
Yeah, I think so. And, in March, you're still 60 plus days out. In fact, what's the exact days till expiration here? Let me look it up real quick. RET.
The March contract, you're at 59 days on the futures. On the RGB, you're going to be close, 60 days, 58 days.
Well, and speaking of which, Adam, tomorrow night we are doing the mastermind group with Coach Tyler over at Tackle Trading about that cash flow condor system. So if you have questions like that, I'd come and discuss them during that mastermind group tomorrow night.
Yeah, and I mean, on a 10 delta, you're looking at selling something up above 1570 here.
Mm-hmm.
That 1570 would put you into that area right there. Maybe you go a little bit more conservative and you say, let me sell a 7-8 delta and let me get it into that 1600 range T. Mm-hmm. But yeah, you would want to maximize your range here. Be cautious on the range, but at the same time, I like it there.
Yeah, I like it as well.
No, Casey, I didn't say you couldn't. I said if you can't sell a bear call on the rut right now, you can't do it at any point. I was being a little, sarcastic in that to a certain extent.
Right.
But yes, I was saying yes, you absolutely can sell a bear call spread on the rut. This is the technical condition you want to sell a bear call spread. This is it, like when you're dealing and that, Tim, that could be any stock. It doesn't have to be the Russell 2000. The perfect time to sell a bear call spread on something along those lines is in a bearish retracement. That's the technical pattern, and the Russell 2000 is still showing that. So to go back to your original question, Tim, you got to go NASDAQ 1, S&P right slightly under that, Dow Jones slightly underneath that, and I got the Russell 2000 trailing all three of them.
Casey, real quick question. First of all, loyal halftime crew and also a very loyal attendee of the lounge. And today was the first day we did the interactive trading lounge.
Oh, how'd that go?
Casey, how'd the Traders Lounge go this morning? I know that Coach Noah and Coach Mark, we're going to mix it up a little bit based on, some stuff Matt wanted to change and have more interaction. Let us know how it went in the chat. I'm eagerly awaiting some feedback.
I haven't talked to Noah or Mark yet today, so I'm eagerly awaiting that as well. But even if it wasn't fantastic, knock your socks off. When you do something like this, it takes a little bit of time.
Cody, did you hear that? That was a hedge right there.
That was a hedge. That was a hedge. But I also want you to know that I'm committed to it.
Yeah.
Okay. So I'm committed to those being user driven on Tuesdays and Thursdays. And even if we have a little bit of, bumps in the road along the way, I'm okay with that. I think it's going to be absolutely awesome. And I think as more people embrace that user-driven experience on Tuesdays and Thursdays, it's going to be even better and better and better and better. So, so I'm hearing good starts, and it was great. That's awesome. I'm glad that's the case. And we're, my coaches over there, tackle guys, they're going to, they're going to help along the way, especially early on. But in a month from now, 2 months from now, 3 months from now, I really want them to take a step back. I really want that to be our community-driven communication, helping each other out, and that's just what tackle is. And everybody at tackle knows that. We're here to help each other out. It's not just us. It's about this community. And so I'm very excited to see how that plays out over the next foreseeable future.
Hashtag Team Tackle. I am embracing that fully, Matt. I put it on Twitter about 20 times yesterday. I'm not moving away from my halftime crew hashtag either. I think both can play.
No. HTC's halftime crew is awesome.
That's dang right. I'm looking at the dollar here, Matt, moving on to currency markets as we move away from stocks. By the way, one last note on earnings. Tomorrow, you've got BlackRock, PNC Financial, U.S. Bank Corp, Goldman Sachs, Bank of America. There are a lot of big dogs in finance tomorrow, guys.
Tim, this might be a little bit of a broken record this week, but we have not had a great start to earnings.
Right. No, I'm not bullish, by the way. Let's make sure we're clear. The market strength today is impressive.
The market strength is different from economics and earnings, though, right? Yeah. It is different from that. So, you've had a rough start to earnings so far. It's matched what we anticipated coming into the 2019 year, slowing growth. It was interesting. Delta actually talked about how the government shutdown is really impacting them. Mm-hmm. And then JP Morgan came out and talked about how the government shutdown is really impacting them as well. So as this government shutdown continues to go on, are we going to even see more of that as and I'm not saying it really is impacting that much, guys. I'm saying they will use it as an excuse to justify their lackluster performance in the fourth quarter, because these earnings announcements we're seeing today, they were before the government shutdown. So let's not get too caught up in that. But it is something that a lot of these companies are pointing to in terms of their slowing growth. So, I mean, lackluster performance, economically lackluster, and yet the market's going up on hope of stimulus packages.
Yeah. And even after tomorrow, it's not going to be done. Netflix, with the big move today on the subscriber growth, Matt, they still got earnings on Thursday night. So, I mean, what do you do?
What are we doing here?
Yeah.
Let's just go buy Netflix in the face of an earnings season where Netflix can go up, 10 or to go down 10%.
It feels like that stock is being driven by bird box investors. I love that tweet that Adam put out on Twitter.
By the way, guys, we had a pretty fun podcast yesterday.
Yeah.
Mark is fully embracing his producer role.
Oh, hey man, we gotta have fun.
Some of those. I got some ammunition against Mark. See, I cut the podcast yesterday. Yeah, I got some drops, bro.
So you guys know, like in life, when you ask that question, what does he have on him? Matt has stuff.
I have stuff. I have. Ditto to Matt's amazing comment. I have that as a drop.
Let's talk about the dollar here for a minute. Obviously, you got Fed testimony. Neil Kashkari is speaking today. Esther George is speaking sometime later this morning. Kaplan speaking, but it's all Jerome Powell. Whenever I see these Fed testimonies, I'm like, if it's not Jerome Powell,
he's out of here.
I agree. They're probably very nice people, Matt. I don't want to call
Get
them
those
lackeys.
lackeys out of
I
here.
don't know them, so I'm not going to call them lackeys. But you do have
They
Fed
work for the
testimony.
Fed. You know them as much as you need to know them.
All right. Fair enough. Touche, right? Is that the appropriate word use of that word?
Yeah, we're lucky Mark's not here right now.
It is what it is. Dollar is rallying though back up towards some old support points, Matt. More in a neutral range long term, but still underneath moving averages. Does this strength here today change your posture on the dollar?
No, I'm still looking to short.
Yeah.
My Forex report basically was this, Tim. I'm waiting for the dollar to get into 96, and then we'll see. Okay.
Mm-hmm.
And I felt like the dollar was going to get into 96 because I felt it was oversold in the short term, a little bit of rally. Europe, Mario Draghi gave a very dovish speech today. Okay.
Mm-hmm.
So very similar to what you just said about Jay Powell. That's the one you want to watch when it comes to Fed monetary policy, right? Well, Mario Draghi is Jay Powell for the European Union. So, Mario Draghi comes out, gives a speech, and he was extremely, extremely dovish today. And he talked about just, quite a bit of risk to the Eurozone. And we already know that. We know the Eurozone has quite a bit of risk in it. We know it's slowing down. We know the European debt crisis is out there and it's big. We understand that, but hearing a central banker say it is different from us knowing it. Does that make sense?
Yeah. I mean, his exact quote was, I think that it's a slowdown, not a recession, right?
Yeah, that's kind of the thing. It's a slowdown, not a recession. Slowdown, not a recession. But when you have dovish announcements like that, maybe not announcements, but dovish,
Speak and
speech
posture.
and words
Yep.
and posture and all that jazz, you're going to see the euro go down. And that's really what the story was. It wasn't necessarily, positive news coming out on the dollar, Tim, because we had a negative PPI report today. We had a negative manufacturing index today. From an economic standpoint, we didn't have good reports coming out of the U.S. today. So the price appreciation on the dollar had nothing to do with Fed speeches, in my opinion. It had nothing to do with economics coming out of the U.S. It was more very negative news coming out of the European Union, both with Mario Draghi's speech, but also German economic data. German economic data in the last couple of weeks has been really, really concerning, and that was a continuation that we saw here today coming out of the Eurozone. So it wasn't necessarily pro-dollar here, T. It was more negative euro coming smack dab right back down into neutrality. So, no, I'm not looking to buy the dollar on this movement. Now, when I talk about that, Tim, I'm talking swing trading in the currency. Day trading is a completely different beast. I'll buy and sell in the same day, right? But in terms of swing trading, I'm not looking to buy the dollar here. It's got way too much overhead resistance here for a swing trade. Way too much. I'm not looking to short on a day like today, but if I get a little slowing momentum, downward movement in price coming into tomorrow or the next day underneath 96, I think that is shortable.
Can we blast the chat out here from Valentino? Welcome to Halftime
Welcome.
Crew. Stay with us and learn something.
Yeah, stay with us, buddy. You're going to learn how to trade and invest.
Everybody watching, just give a quick hi, Valentino.
Just say hi, Valentino. No, we don't want you soliciting our people. But thank you for watching and giving us a click and a like and a share. We really appreciate that, Valentino.
C'est la vie. I'm looking at the pound dollar, Matt, against all of the different cross pairs as we're heading into this Brexit vote. The pound dollar is down 1%. I don't know how many pips it's moved here. Pip change on the GBP USD on the daily, 134 pips is no joke. 1% movement is no joke. I know that it was showing some reversal tendency, but then it started to head back.
Listen, I said this in the Forex report. Tackle traders are not going to touch the pound coming before that vote on Tuesday.
Correct.
Okay? And that was funny, Adam. Bye, Felicia. That was funny. But in terms of the pound, Tim, if we get some real negative news coming out of that vote in an hour from now, and you are faced with hard Brexit, I certainly believe that the pound could break that 125 barrier and go down to the 120 to 122 barrier over the next few weeks. That's how nasty a hard Brexit's going to be, guys.
By the way, news-based trades going into events like this, stop losses on currency pairs are not very effective because the
No, no,
bid-ask spread
no.
opens up, your
Oh,
fill rates, your slippage, it gets destroyed.
you get
Some of you
smoked.
out there might be trading currency in Forex. Just be aware that we do have this volatility in front of us.
Listen, you
Plan
don't have to
accordingly.
jump in front of the train, bro. Right?
Yeah.
Just wait, just patience. Wait. Remember, I've talked about this many, many times in the halftime report on a very big announcement. This is not an economic report, Tim, where you have a number that's going to come out and then it's going to be, the algorithms are going to price that in, right? That's not what this is. This is like a Fed announcement, right? You have the policy statement, then you have the news that all comes out of it, then you have the interpretation. And in something like this, such an important vote coming out of Brexit today, you're going to have the quick take universe, the hot take universe, you're going to have the Twitterverse, you're going to have all this come out there, and we're going to have the interpretation of how big of a defeat this is. Because the only shocking thing was if this gets passed, Tim. If it gets passed, I'd be shocked at that. So it's widely expected to be rejected. Let's see what happens after we get the vote tally, though, and let's watch that market respond. I think there's going to be wonderful trading environments on the pound once that volatility subsides coming out of this major situation.
We got to talk about Newmont Mining. Abel asked for a request. It was actually next in my notes here, Abel, as I was doing my prep. Newmont down 9% on mergers. And the gold sector, they're going through this right now, Matt. They bought Goldcorp. It's starting to fade here a little bit. What's your read on Newmont? Because we both like this company quite a bit.
Yeah, I still like this company. The merger was a big merger. I mean, we're talking Goldcorp and we're talking Newmont Mining, two of the biggest mining companies in the world. And Newmont bought GG. They bought Goldcorp, and I think it was a $10 billion deal. The market is, obviously not liked it initially. Until we break that $29 level, though, I'm not going to be too concerned.
Yeah. Let's go through all the commodities. Speaking of gold, we'll get to it here in just a minute. Start with crude oil, though. I always do. It is the biggest, most important commodity in the world. Not even close, by the way. One of the most amazing infographics I've ever seen is where there's this place called Visual Capitalist. They do some cool stuff. And they had the size of crude oil. And then all of the different metal markets fit inside the size of crude oil. I mean, it's that big.
Yeah.
Reversal tendencies here, Matt. Interesting chart and candlesticks. We got that V-shaped pattern. What's your read on the chart?
Nothing.
Yeah.
Wake me when it breaks 50 or 55.
Wake me up when January ends. We'll see where it's at. If you do break and trigger $55, 50 either direction, perfect K trade. We've talked about that. When you're sitting at 52, it's kind of a nothing to see here. We do have inventories tomorrow, and earnings season really has not kicked in for any energy stocks yet. So it is a nothing to see here, in my opinion, as well. Up 2%. I mean, it is of note, but that's lower range than what we'd seen in the past. Brent's up 2%, same old thing. Natural gas down 1%.
I mean, the news was OPEC and Russian cuts.
Yeah.
I mean, that was the news. But again, it's to me, it's neutral, range bound, and it's neutral until it goes either under 50, and that would be slightly bearish, or above 55. And I think that would be, you got a pretty big bullish case above 55.
Yeah. And first of all, Casey, good catch. Yeah. And then very good call, John.
It was Green Day, John.
It was Green Day.
It was Green Day.
Yeah. The Old American Idiot album. I know that they don't get a lot of play, but I still like that band.
Green Day was great.
They were great. Yeah, they were great. Gold, silver, copper, platinum, they're all down just a hair here, Matt. Silver's down 0.6%, gold down 0.3%. Natural gas down about 1% as well, but there's not a lot of action in the commodity market. The action's in tech stocks today.
Yeah, gold and silver just high basing still. I mean, we've talked about, I think I said this like 2 days into this. It's either going to retrace down into the moving average, or the moving average is going to catch up to it. And what we're seeing is the moving average is catching up to it. So be patient. A close above 1300 is kind of the trigger you're looking for here, T. So, but yeah, it's just hanging out, being patient.
Yeah, commodities are just mixed today. Even the ags and the grains, they're a little bit down, but not a lot going on there, Matt. As we move forward, one thing I want to do here today, and by the way, halftime crew, we're getting to that point in the day where we're going to focus on our feature. And Matt, one item I did want to discuss today was the difference between targeting on the first target and the second target. And while we get ready to talk about that, I do want to invite everybody to give us a quick like, a quick share.
We're only at a 38% Fibonacci retracement right now.
Just wait for it. We'll get to 50%. You watch. I need 5 more likes right now, and then we're going to be at a 50% retracement.
Let's scale in at this point. We'll scale in at 38%. When it doesn't work, we're gonna load up at 50%. That's what we're gonna do.
Yeah, a couple of requests on stocks here. Boston Science from Adam. Give us a quick peek here, Matt, on BSX.
Yeah.
Like the chart. Yeah, like the company too. Yeah.
Like the chart, like the company.
Yeah, for sure. Volatility up here though.
We can look at US Steel right now. I always like looking at US Steel. US Steel closing right there at about $20. If it closes under $20, that's confirmation on a bearish retracement and perhaps shorting. So if you own US Steel, this would be a time where you would want to either collar it or protect it.
Yeah. One thing I do want to remind everybody of is that even though we are seeing some strength here in the market today, I just took a peek at an earnings calendar heat map that was in the prep mat. There's only about 10 companies that have reported so far on the S&P 500.
We're very early into it.
It's like taking the first down touchdown back, off the kickoff.
Tim, we're at a 62% Fibonacci retracement level on the likes versus the current watching. And if we go up more than that, that's no longer a retracement.
C'est la vie. I don't even know what to say about this fib stuff. Oh my, I'm gonna break out my Fibonacci album for you here in just a minute.
Yeah. All right, continue.
Okay, now a couple things. Number one, I did want to talk about two targeting, and there's several candidates that I think really fits this discussion. When we do our scouting reports, and today is Delta Tuesday, Matt, which means we're going to talk about a directional component in charting or management or some other form or fashion, and targeting is a big part of any trading plan. It's a critical part of any trading plan. And when we do our scouting report planning meeting, we always come up with two targets for a reason. Mm-hmm. First thing I want you to do is kind of explain why are there two targets in the first place, and then we'll dive into some examples.
Well, first of all, the first target is always what I would consider a conservative target, right? Where like on a retracement, for example, and let me just pull up my software here for a second. I like to use this software because it allows me to draw a little easier. Mm-hmm. So like, for example, if I got a retracement like this, right? And it's coming into my nice little support channel there, and I get my upward movement in price right there, right? That's called confirmation. So if I'm looking at a bullish retracement, for example, and I have it come down into that 38 to 50% Fibonacci retracement level, that's kind of the zone I really, really like on retracements. Your first target is always going to be this first area of resistance, right? Mm-hmm. That's the historical level that we see. We know it's been there in the recent history. We want to target that first area of resistance. The second target is going to be up above the channel, typically speaking, on a retracement, because remember the pattern in this goes higher high, higher low, higher high, higher low. So the pattern is actually establishing higher highs. So the next target you want to target is typically that next higher high. Now there's a lot of ways to determine what that next higher high is. Fibonacci extensions is one of them. Significant whole numbers is another one. The one that we like to use is more potential average yield. So when you're dealing with the bullish retracement, that's kind of what you're looking at, is your first target being the previous area of resistance, and then your secondary target usually being something like a Fibonacci extension level or potential average yield, which are two very similar. Now, in terms of the bearish retracement T, you have that same type of situation. You have it lower low, lower high. And so on a bearish retracement, your first target is typically going to be the first level of support. Your secondary target is going to be underneath that first level of support. So if it breaks underneath that level, you now have this continuation going down. And again, Fibonacci extensions, potential average yield, those are two really, really helpful ways in terms of identifying where that secondary target is. So that's on what we call a retracement. Now on a breakout, it is a little different. And so like, for example, T, this would be like a continuation pattern that we like to call a cup and handle. Mm-hmm. Now on the cup and handle, your trigger is right above the resistance level right there. So once it triggers above that level, and then you have a stop loss typically underneath the breakout channel, somewhere around that, somewhere underneath the breakout channel, your first target is going to be your extended target, and then you have a slowing momentum target typically for your second target. So depending on the technical pattern that you're looking at, your targets are going to be a little different. Retracements are a little easier to target than breakouts, simply because you've seen that first area. So in terms of those targets, though, you always put two targets, because the first target is a conservative target. Your secondary target is your continuation target if the pattern continues. And you make decisions at these levels, right? That's what you have to make, is you have to make a decision. And so let's take a bullish retracement, for example, right? Let's say we have a nice little bullish retracement, good little stock, comes down into our support level, hits our support, upward movement in price. We got a stop loss here. We're targeting there, and then we're targeting there, for example, all right? So as the stock goes up into our first area of resistance right there, you got to understand that the last time it hit that level, it came back down. And a lot of times we see a little bit of weakness at this level, a little bit of consolidation, nothing, big, but just a little bit of consolidation at that resistance level. And so you have a decision to make. And the decision is this: are you going to lock in profit? Do you want to close the position, right? That's option number one. Option number two, do you want to trail up that stop loss? That would be option number two. And then option number three would be to do what's called scaling out of the position. And scaling out of the position is basically, let's say I have, 6 contracts on an option trade. I'm at my first target. I lock in profit on 3 contracts. I trail up the stop loss on the remaining 3 contracts, giving it a little bit of room to run into that secondary target. The only thing you can do that's bad in that capacity, though, T, is to do nothing. Is to literally do nothing. At a minimum, you got to adjust this stop loss up. At a minimum, you got to adjust that stop loss up. So you got to make that decision, though. And usually at that first target, unless I see something concerning in the overall market, in its sector, like slowing momentum in its sector or the market or whatnot, or a big downward movement in price at that point, I'm either going to just adjust the stop loss or scale out. I'm not going to lock in. And then as it therefore goes into that next area, at that point, I'm just locking in profit.
Sure. And from a philosophy standpoint, it completely makes sense. And obviously, there's a reason why traders have to have some gray area in their judgment. And so let's use a couple of case studies to try to highlight these different decision-making factors, right? I went back and I looked at some of our reports in the last few weeks, and I'm loving the reports. I think they've gotten tremendous. They're tremendously valuable. People who are out there who are looking for somebody to kind of go out and bird dog for them, those reports are fantastic.
Do you think that's going to catch on?
I don't know.
Second question. Do you want that to catch on?
I damn well do. Yeah, absolutely. So I went and looked at the option report, Matt, from January the 5th.
But hold on. Before we pull up your stock, can you give a little context to Bird Dog? So
listen
that people are like, wait a second. Okay, just listen to the podcast.
Listen to the podcast. You'll know what bird dogging is. All right. Absolutely.
It's not Tim's Urban Dictionary definition.
Well, first of all, you go into Urban Dictionary, they're going to make anything seem like you shouldn't use it. That's all fake stuff. But I like our definition of bird dogging. We're going to make it catch on, and I love the idea. Matt, I went back to the option report from January 5th, and Coach Tyler was the one who delivered the report. And a lot of the picks, they come from the team exercise and scanning process we do on Friday afternoon. I'm looking at a couple here that I think are great candidates to discuss first and second target. Okay, you ready?
Yeah.
TWLO. TWLO was originally on our report on the 5th, okay, and we called it a bullish play. Our original trigger entry zone was 91.10 or higher. Now, that means a trader has to apply any of their individual rules. They might go to 92 or 91.50 or just say, hey, forget it.
Can I just say what mine is?
Yeah.
Okay. So this would be considered a breakout play, and we've talked about this as a pattern we've seen in the market recently, where some of the stocks that didn't get tanked the same way the market did, they kind of held up, but then they formed these reversal patterns. And remember what we said, the trigger was above the high of the right shoulder. And that's what we saw here on Twillo. And that's why the entry was at that point. Stop loss, I believe, had to be under 90.
Well,
Okay.
I think our original stop was under 85.4, which was that candle. We had a complex pattern in here. We liked the candidate. And then it was, I think in the video, we were talking about how you would move it up pretty aggressively. But yeah.
Once it breaks down, confirms, you want to adjust it slightly under 90, I would say. But in terms of this rule, Tim, and it's like I said, every trader is going to be a little different. Some are more aggressive, some are a little more defensive or conservative in their rules. Typical rules have something to do with the ATR, though. Whether you're talking about 10%. So when you see, what was that number, Tim, on the entry? It was 91.10.
91.10.
91.10. So when you see in the scatter report that it says, okay, 91.10, that doesn't mean you put an order at 91.10. That means you have to put an order above 91.10 because that's the high of that pivot. So in terms of that, traders might say, okay, I want to enter in at 10% of the ATR above that level, right? And that's more of an aggressive entry, I would say. So if the ATR is 1, you want to enter 10 cents above 91.10. Right? If other traders would be, no, I want to be a little more cautious on breakouts. And, a cautious rule or a conservative rule on a breakout would be, all right, 50% of the ATR above the level. So 50% above the level would be 91.50, right? So it's up to the trader to determine where to put that order. It's not my job to tell people what to trade and where to trade it. It's your job as a trader to say, okay, I need to apply my rule in my system to that breakout channel. So that's why that 91.10 and use the ATR. The ATR is a gauge to determine how aggressive or conservative you want to place that order. The target, Tim, I believe the target was,
first target was 100.
I know the first target because every time it goes above 90, it goes to 100. So the first target is at 100. Which was the first area of resistance over here. Secondary target, I can't remember what it was.
110. Which is, I believe, a Fibonacci extension.
It was a Fibonacci extension. But in terms of this first target, we're obviously at this first target, right? And you have a question. What do you do? Do you lock in profit? Do you scale out? Do you do nothing? Do you trail up a stop loss? Let's throw it out to the crew. If my stop loss originally at 84 adjusted up to 89, and let's say we currently have it at 89 right there. Option 1, lock in profit. And let's say we have 4 contracts, T. Lock in profit. Option number 2, scale out. Take 2 on Twillo and leave 2 to move up.
Option
number 3, adjust stop loss.
Option 4, turn it into a bull call. I know
option
that's
4, advanced traders, option 4. Okay. First target, you're right. So first target, option 4, roll it into a bull call.
And while those answers come in and people think about it, here's the fun thing about trading, and you should be very patient with your profits, right? It's a lot easier to handle it when you're gaining. You should be very quick to get rid of losers, and you should be patient with your profit. The mindset would tell you to do something that allows you to continue to make money if you catch the bigger run. But
scaling, let me answer a question very quickly, Tim. Scaling out, Adrian, means that if you have like 100 shares, you sell 50 shares at your first target and you keep the remaining 50 shares. So you're basically splitting you're basically hedging yourself is what you're doing. And again, there's no wrong answer here. The only wrong answer is to do nothing, right? So I see a lot of option two. Me personally, I would say based on the totality of the market, based on this Twillo, right? Hitting its first target, you have momentum coming into it. You're not overextended yet. I wouldn't be locking in profit. No, when I say lock in profit, Michael, I mean you're closing your 4 contracts, right? So that's what I mean. So yes, scaling out is similar to that because we're locking in profit on half of the contracts. So based on what I'm seeing here, though, I do see a little bit of slowing momentum at $100. It has had a hard time breaking that level over the course of the last 4 or 5 days, T. You have strength coming into in the last 2 days, and the market could certainly appreciate, especially in this sector. So I would say either 2 or 4 in my opinion.
Yeah.
At a minimum, I think you got to lock in some profit. I think you got to, I do. If you don't know how to roll it into a spread, I think scaling out is the best choice here, right?
Sure.
So, but if you do know how to roll it into a spread, this would be a perfect situation of rolling a directional call trade into a bull call spread.
I do want to mention to Adrian here. First of all, Adrian, we love newbies. So always newbie questions are great. In fact, our veteran halftime crew, why don't you welcome the newbies? So let's make everybody feel great. I think sometimes, Matt, when you're brand new at something, you jump into an environment and maybe you're not as adept at the lingo as the intermediate or advanced people. It can feel intimidating, but we love new traders.
Listen,
that's the whole
point. We're educators first and foremost, right? So we've been teaching newbie traders how to invest and trade and technical analysis and options and everything for 13 years now, right? Okay. As a newbie, you are in the right spot. As a newbie, you're going to be overwhelmed. Okay. It's par for the course. You're going to be overwhelmed. But the only way you don't get overwhelmed is if you come here every day and you do your job as a trader. And that's what we do here is we look at, top-down approach to the market on a daily basis. We look at different indexes, sectors, and whatnot. And I get it that the language for new traders can be very, very, very difficult, but I promise it comes fast if you dedicate yourself to it. So believe me, when we're doing this show, Tim, we're not speaking to beginners. We're speaking to our community that has beginners and very, very advanced traders in it, right? So some of that, when we're talking to just trader talk and we go into our trader talk, yes, that's going to be confusing and overwhelming, but just keep with it. And you're seeing some of our amazing team just come in here. And this is why I love this team, guys. It's like Marie coming in here saying, hey, we're all newbies, just keep listening. Andy, who's now been a part of our community for only a few weeks now, Tim, I believe it's 3 weeks, Andy, and he's coming in and just stay with it. So if you're new, guys, you found the right spot. I promise you that you have found the right community. Just stay with it.
You've made the right match, which is a good transition into our next company, Match.com.
You swiped right.
MTCH is the next one I want to look at. I don't know. Come on, dude. I'm having fun here. Match.com was on our candidate list in that same report, Matt.
Such a bad joke.
I get it. Dad jokes.
I like it, though.
It was on our candidate list, and the first target was 47. Second target is 50 here. It had a nice breakout, Matt. We had a trigger above 44. It did do that, start to run. Now you're at 46.59. You're almost, oh my gosh. I mean, just a few pennies from hitting that target here on the top of the candle here today.
You're in the zone.
Yeah.
Tim, a target is not a specific number. It's a zone. You're in the zone. So you have a decision to make.
Yeah.
So based on everything we just talked about, right? Option 1 was lock in profit.
Mm-hmm.
Option 2, scale out. Option 3 was basically adjust stop.
Mm-hmm.
And option 4 was roll it into a spread. So what do you think?
I would go for option 1 probably. I would take it off. Yeah, you're at the top end of a channel here as well, and also at the old pivot point on that gap fill. If I want to let something run, I'm probably in other candidates. I like the upside. You could debate that one though, because if you can get through 47, it's got clear sailing to 50, right?
Technically, and again, there is no wrong answer here. There is no wrong answer. This is an answer up to the individual to make, right? So when Tim says I'd lock in, I see the reason. I see it. He's locking in because it filled the gap. I know my brother.
Yeah.
I know what he's doing. He's locking in because he's like, I don't think it's going to get above the gap level. And if it gets above the gap level, I can get back in. I get it. I understand. There's nothing wrong with that. I love the strength coming into it, though.
Yeah.
I do. I love that strength coming into it. You just broke out of a high base. You have big green candles. Big green candles are typically momentum candles. Volume is a little concerning. Volume is a little concerning, but I would adjust stop loss there. I scale out or adjust stop loss. That's kind of where I'm at on it.
Such an important part of trading, guys, is knowing to get rid of losers quickly and how you handle winners. It's all about trading plans. I was having a discussion the other day with a veteran trader of mine and that I have mentored and taught over the years, Matt. And, we were talking about something really simple. And at first he kind of got down about it because he's like, well, why do I have to have a, discussion about the most simple thing I should have figured out years ago, right? And I'm like, no, you don't understand. I mean, that's the complex part of any trading. And but by the way, any field, the more advanced you get, the more nuanced even the simplest things can become. How you handle target one, target two is critical, for traders. And that's whether you trade options or stock or futures or Forex.
On high dollar stocks, I've found scaling out and rolling into bull call spreads is advantageous.
Yeah.
That's what I've found. When you're talking about that first target, I don't think it's wise to just lock in all the time on the first target. I mean, if you'll remember, and I've said this in the past, but if you'll remember, there's 3 outcomes to every trade, Tim. There should not be 4. There are 3 outcomes to every trade. Outcome number 1 is you take a small loss. That's what your stop loss is there for, right? Now, option number 2 is you take a small win. That's what that first target, adjusting the stop loss, that's what that means. You're at your first target, you're adjusting a stop loss, it comes back down, you get stopped out for a small win. Or you scale out and lock in profit. Gino loves to aggressively scale out when he starts making money. So that's that small win. And your third one, and they're needed in the market, is those big wins. And if you constantly just aggressively lock in profit at that first target, you're never having those big wins, right? You're never having that one that, bounces on 47 and before you know it, it's up to 54, right? I mean, because with all the good intentions aside, your good intentions to get back in at 47, above 47, doesn't happen a lot, Tim. Because either 1, you're not in front of the market, or 2, you're late to the party and you found it 2 days late, right? Take Netflix, for example. It went parabolic. Well, if you just constantly lock in, you miss out on that. I love what Coach Noah says. You need to keep it open, and I got to move my video so I can see what Coach Noah said, so I can get it on the record here. You need to keep an open-ended risk graph for the gains. I agree with that.
I love the conversation. Obviously, we got a lot to focus on here. And in the halftime report, I want to go rapid fire down a bunch of the stocks Cody found for us. He's got 5 Tackle 25 setups, and maybe we'll just kind of take a peek at all of them. ExxonMobil, Matt, obviously leadership. They got earnings 1st of February. Be aware of it, but he likes that pivot, I guess. JP Morgan.
Exxon's got a little bit better this morning. It was up.
I like a short under 21 there.
Yeah, trading wise, different. JP, these are all Tackle 25 candidates.
Yeah, mind you, again, these are investment type situations. But when you're seeing a situation like this, and you do have earnings coming up, this is an opportunity to hedge against an investment on Exxon.
Yep.
You don't hope for Exxon to break out of 73 and just run to 77. You're in a bearish retracement. You got earnings coming up. This is an opportunity to hedge.
I've already looked at Twillo and Boston Science, a lot of the bank stocks. Give me Cron. Cron also found Cody's watch list this morning. This is one of those dirty, sexy money plays, Matt. Medical marijuana company out of Canada, and obviously a lot of volatility. I've seen these guys in the news all the time.
I didn't see Cron in the news today, but I did see
Canopy Growth.
I saw Canopy Growth in the news, and I also saw Tilray in the news today, and both of them were negative. So a little bit of negative reaction coming out of the marijuana industry. This to me is a growth industry, and it's going to be a growth industry for the next 10 years. I think we all have massive opportunity in this industry over the next 10 years, mind you, as well. I do like it above 14.
Yeah. INCY from the stock report. Cody, come on in here for a minute. What'd you like about this one? Just the breakout run. Look at that.
Out of a high base.
Beautiful run.
That's exactly what that was. Breakout high base, and it's broken out more than when I put it on there.
Yeah, it's ran. Breakout ran. Why didn't you text me this, Cody?
It's on your watch list.
On the report, you could have opened it.
The report didn't get to me until 10:15, Cody.
And then WWE, Matt, also been on a lot of our candidate lists recently, showing a lot of strength. It was the last one Cody had. Last stock we're going to look at today.
It was the same. It was up this morning a lot. Came back down a little bit.
Which one? I was reading.
WWE.
Oh, WWE. Yeah, I like this breakout. I like the pivot. I know it's a little bit of a weak on the breakout, but Cody and I were talking about this the other day. This is a really good pattern. When you break out and it tests back the breakout channel and doesn't come under, that gives all of us a little bit more confidence on WWE.
Yeah, for sure. You know, great job today, Matty. Obviously, we're going to be watching that Brexit vote and whatnot, and also this tech breakout. But just last reminder, everybody, obviously, there's so much in front of us here, guys. Trade with caution like you always should.
You have United Airlines, Bank of America, BlackRock, Goldman Sachs, U.S. Bank Corp. Those are some big names all reporting tomorrow morning or after the bell tonight. So, Tim, this is earnings season. We're 10 earnings into a 1,000 different earnings reports over the next 3.5 weeks. We're going to have some fireworks, guys, over the next 3.5 weeks. I like what the market's doing. Let's take a quick peek at it real quick on the ES. You're settling in at 2607. I don't expect to see a lot of action before that Brexit vote in the marketplace. And so I think the market's going to settle in for the next 30 to 45 minutes, Tim. Wait for some more news coming out of Brexit later on today. Let's if we close above 2600, you got to say that's more positive. If we do come back under 2600, guys, I will not be neutral. I will still be slightly bearish. So I do think today's close is very important.
All right. Give me a quick hashtag halftime crew or a hashtag team tackle or both, guys. Great job here today. Love the participation in the chat.
If the halftime crew is on Twitter, make sure you at Coach Frank. And Frank, if you'll put your Twitter handle in there, Frank's putting together a little community on Twitter for all the tackle community. So
yeah, did you see the list?
Yeah, he's starting to put it in. I saw John. I followed John, a couple others as well. Yeah.
That's really cool, man. Yeah, I love seeing that.
I think starting it's to build Frank Martin 23 if Frank stepped away.
Sure.
So there you go, Frankie. At Frank Martin 23. So definitely at Frank if you want to join that communique between Team Tackle on Twitter.
Perfect. All right. Great job, Matt. Great job, Cody.
And by the way, I will be following everybody, all the community as well. So once they get into that, me and Tim will give you a quick follow.
Last weird thought of the day. I saw this article that Marilyn Monroe had a lock of her hair from 60 years ago sell for $16,500, Matt.
People are dumb.
What kind of weird
people are dumb.
Oh.
That is not as bad as the guy from Japan who paid 350 million yen for a fish.
It puts the lotion on.
Okay. Wait a second. Hold on. So let me get this right. Was that a combination of your interpretation from what's his name?
Listen, I guess it was kind of like an Alex Jones.
Okay, hold on. No. I want to see if I can get it. That was a combination of Alex Jones in Silence of the Lambs as the serial killer, right?
As Hannibal Lecter.
Now
no, not Lecter. Bill.
The Bill guy.
Yeah.
Now I'm going to play the song by O Lazarus, that Goodbye Horses song. Just dance around my office. All right, guys, have a wonderful day. We will see you back here tomorrow for the halftime crew, and get over there, get in the game.
All right. Later, guys.